Don't forget to subscribe, like, and comment below. Hi guys, and welcome to my YouTube channel. My name is Wanda Zandarasiwera. In today's video, I'll be giving you guys tips and pointers to consider before you buy a shares of a particular company. So it's very important to understand whether you are an investor or you are a trader. And this is simply because the best companies for a trader are actually not necessarily the best companies for an investor, right? So understanding whether you are a trader or an investor would give you a good guideline of the companies which you need to go for, right? So the difference between the two is normally the time in which you're willing to hold the stock. So investors are normally looking for a long-term plan, so they go for companies with good long-term strategies. They normally hold their companies for or their shares for about 5 to 10 years. And traders, on the other hand, are people who are actually looking for an opportunity to make profit on the fluctuation of a stock on a daily basis. So, as an investor, this kind of fluctuation that may be beneficial to a trader, or which a trader actually look into on a daily basis, may not necessarily have an impact on you. Moving on. So the rule of thumb in buying shares is actually to buy things which you understand, right? So you need to start in an industry that you understand, as well as companies that you understand. So this helps a lot when you're trying to assess best companies in an industry, as well as trying to figure out companies that has potential growth, right? So for an example, you may have background knowledge of, let's say, supermarket retail stores, because maybe that's where you work, right? So you're most likely to be familiar with the things that makes that company profitable, as well as maybe other companies that are making profit or that are better than the one in which you're working on. And that could be a good start of looking for a company which you can invest in. This also helps in trying to avoid buying shares because of FOMO. So buying shares because you hear people talking about it is actually dangerous, because you can't really assess the risk, which leads us to our next point. Make sure that you do your own research, right? So if you're interested in a company, you need to know how they make money. You need to understand what product they're selling, what service are they providing, right? And you also need to understand, are the services and products going to be available, going to be needed by people in the near future? For an example, let's say in the digital space, everything is moving into a smartphone. So the single service devices such as MP3 and cameras may not be necessary in the near future. So companies that are sole providers of MP3s and cameras, they may not necessarily be stable or be profitable in the near future. So it might be a good idea to actually consider maybe the smartphone kind of a company, right? So those are the kind of things which you need to research about. You need to understand what gives this company a competitive advantage comparing with all the competition that are offering the same services. This is where maybe you can look into something like a market share. Who is the market driver providing key initiatives that will sustain the company? So these are the kind of things which you need to research about and try to figure out a company that shows to be more adaptive, more innovative, and they show a potential of growth in the near future. So that is the things which you need to look into. Moving on, and then you can move into your numbers and trends, right? So we have fundamental analysis, we also have technical analysis. So for fundamental analysis, you're actually measuring intrinsic value of a company by examining the economical factors as well as the financial factors. And for technical analysis, here you're trying to predict the behavior of a stock or a share by looking into its past performance. So we'll start with fundamental analysis, right? So as you look into fundamental analysis, one of the important factors that you need to look into is company's management style. You want a company that has good management. And if a company always changes their CEO, then you know already there might be an underlying issue here, and you can research it further to try to understand what's happening, right? Also, you want to understand, does the CEO have scandals that can ruin a company's reputation, right? Sometimes you find that these scandals or rumors are not necessarily impactful. They don't have a long-term impact. So you assess those kind of things. You try to figure out that, does the CEO have like past experience that are similar, that can be beneficial to this current company, right? So those kind of things will help you to figure out if this company has a potential growth or not, right? Then the numbers. So here, looking into the numbers on fundamental analysis, you're trying to figure out if a company is undervalued, or if a stock is undervalued or overvalued, right? So you assess things like your balance sheet, your income statement, etc., trying to figure out if this is a good company which is undervalued, because that's where you want to buy, right? So you will look into things like your revenue. You want to know, for the past few years, has the company been increasing, their revenue generation, right? Like, you want to buy a stock from a company that has been progressively growing, right? Sometimes a company does not have a drastic growth, however they have steady growth, and those companies sometimes they're more stable and they may be attractive to buy, right? Another thing that you need to look into is a profit margin. This is the amount of money that a company is left with after they've paid all their expenses. You also want to look into equity to debt ratio, right? You want a company that has more assets than they do of a liability. And you can do this also with bigger companies, because they also have a liability. So you need to be mindful, or be cautious on buying stocks on companies that have high liabilities, because they may go bankrupt and you might be at risk of not recovering the money or gaining the profit that you would wish to gain. So another one to look at is earning to share ratio, right? This is how much the market is willing or is looking to pay for a price based on its earning. So if the value is high, therefore the share might be overvalued, right? The price is actually higher than its earning, right? And if the value is low, it might be a good opportunity to buy, right? These are the basics that you have to look into. There are other ratios that you can look into. I just chose the ones which are frequently used. So let's move into technical analysis. So technical analysis, on the other hand, it's a strategy that includes a lot of methods, right? So it is focused on trying to determine if the current behavior or the current trend of a stock will continue, and if not, you try to identify by when will it reverse, right? So the principle that underline the technical analysis is that the market price actually reflects everything that you need to know about the economical factors that impact this share. So people who use this method actually believes that the price moves in trend. So they look into the history to actually try to determine the future using mathematical formulas, using charts, using candlestick methods, etc., right? But I don't normally use this kind of things, because they are mainly used by people who trade in forex trading. So I use a lot of fundamental analysis. So that's it from my side. I hope you learned something. But if you're interested in other technical methods, you can ask me on the comment section. We can talk about it. We can explore it together, because I'm also not as exposed to them. But also, please, guys, don't forget to subscribe, like, and comment below. That's it from my side. Thank you, guys.